Potentially, yes. I think one of the problems is the UK was slower to go into lockdown and slower to come out of it, which is one of the reasons for the lag. But now that lockdown is easing, I think there's the potential for that pickup. It will also depend on whether or not sort of the shift in terms of style of investing changes. At the moment, it's very growth focused. Obviously, that benefits very much the US with its large technology sector, and not so much the UK, which is far more value driven. But if we were to see a change in that, it could be beneficial for the UK.
I mean, given the way that we are so focused on stimulus in the United States, and that does seem to affect sentiment on a day-to-day basis around US markets here, should we refocus perhaps on what policy announcements we might get in the UK that would stimulate more interest in UK equities? I know the Bank of England governor is reluctant to get into a discussion about whether there's another 100 billion sterling in QE to come in the fourth quarter of the year here, but I know the markets increasingly feel that may be necessary alongside a fresh announcement from the Chancellor on stimulus.
I mean, definitely any new announcement, either from the Bank of England or from the Chancellor, I think would be seen as a positive. But I think at the moment, both are being cautious not to make it built into the price of the market. Otherwise, you get the danger that any announcement actually it doesn't really react. So I think they're being cautious at the moment.
Hi, Marina. Very interesting comment you just made there about the style of investing. And whilst it's impossible to disagree with you, what you didn't mention, of course, was Brexit. And I think so many, perhaps, of your customers and our viewers are saying, oh, this discount is also about Brexit as well. So are they mistaken in thinking that if by some miracle of miracles there is some agreement between Frost and Barnier and some form of framework deal which avoids a hard Brexit at the end of this year does happen, are they wrong in thinking that there's going to be a FTSE boost?
No, I think that would definitely give a boost to the FTSE. But as you allude to, I think there needs to be a lot of work before that looks like a reality at this stage. There's still an awful lot to play with, partly because COVID has taken, quite rightly, a lot of time and focus. So I think it's going to be a bit of a long slog to get an agreement over the line, particularly in time for that December deadline.
Yeah, and we were looking, of course, at what the politicians are doing on Capitol Hill. We've already had the conversation many times today with various people about whether it's fiscal or monetary that's needed. I mean, dare I say it, Rishi Sunak has been one of the few, I guess, in certainly many people's eyes, shining lights of the government throughout this crisis as well. But can he carry on delivering? In fact, does he have to take a little bit now going forward rather than just keep giving as well? Are you expecting anything fiscally to actually move the needle on UK assets?
I mean, I think the Chancellor is caught between a rock and a hard place, and there is no doubt that whilst yes he could do more, and there is suggestion he might look to extend the furlough scheme further, etc. I think also there is the very strong possibility that the government may need to look at taxes, and things like capital gains tax, we've heard in the news, are being reviewed potentially. So I think that the government will have to look at that as well as a means of trying to recoup some of the money they've outlaid to support the economy.